them clocking in some order wins. Some of them have already seen a big run, so keep an eye out on them. But a decent opening, 30 points up and down, well, you'll take it, right?
It's quiet, right, Nigel? But it's up 30 as well on the Nifty. Another space is the city gas distribution companies, right? Because there was widespread expectation that those Kirit Parikh committee panel recommendations would be approved. Friday was the last day to do it if they had to come into effect from the 1st of April. It has not happened. And you're seeing a 2% cut on MGL. IGL will come up on your screen. It is down 3%. IGL is actually, actually losses are increasing a little bit more. Maybe we can look at Gujarat Gas as well. Gujarat Gas is down about, Gujarat Gas is absolutely flat. I mean, IGL and MGL are the two stocks which are taking it on the chin at this point in time. Now it's mostly oil and gas, which is, of course, also moving around because of the big jump in oil prices. I think we've laid this out. ONGC is the top of the board right now with a 3.5% gainer. On the other side, you've got BPCL and HPCL. Both are down about 4% or so as well. Oil India, along with ONGC, is the other one, which is up 5%. I have to say, for this time of the day, numerically advances outnumber declines by a large number, 5:1, and maybe volumes will pick up. Or maybe they'll remain slightly on the lower side because of these intermittent holidays this week. But it's quiet. It's a quiet kind of start. Adani Enterprises starts down 2%. Adani Green is down about 2%. Adani Wilmar is down about 2%. And a few other names here on the losing side as well. Our market master of the day is with us, Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company. Nilesh, good to have you with us here. Good morning. Great to have you with us on CNBC-TV18. First thoughts, Nilesh, on the markets as they are set up as we start a new financial year, FY24. 23 over 22 in terms of at least index returns was kind of flat, although stocks did see a fair bit of damage. What's your prognosis? Will we improve, or will it be a bit of a muddled market for the bulk of this year too?
So it's very difficult to take a one-year call in equity market. But my feel is that next year also we will see a lot of volatility based on events. If those events turn out to be in favor of India, then certainly markets can deliver positive return, because since almost August 21, markets haven't given any return. But if those events go against India, then markets may deliver negative return. For example, if you had asked me on Friday, I would not have been able to guess that OPEC will cut oil production by more than 1 million barrels and pull up the oil prices. Now, this kind of events will come and derail our equation.
Got that. The narrative. Nilesh, hi, good morning. This is Sonia here. Thanks for joining us. The narrative so far up until now is that you would make better returns in debt this year compared to equities, has shaped up very well. You think the tide is turning, or is that going to be the case as well in asset allocation? Better to allocate, more money to debt versus equity in this calendar year?
So I will certainly say that the certainty of making money in debt is far higher. Interest rates seems to be picking out in global markets as well as India. And we could see rate cut cycle begin towards the end of 23, beginning of 24. So this year, debt return will not only have coupon income, but also capital appreciation thanks to interest rates coming down. Whereas to generate return in equity, one will have to really pick up good stock and pray that events continue to turn in favor of India. But mind you, equity and debt is like so sunar ki ek luhar ki. 1 day's return in equity can overtake 1 year's return in debt in no time.
Yeah. Nilesh, debt has been a touchy topic as well, right? Overall, with all these taxation changes, and I was curious how you are thinking about this in terms of what has happened. That was another bolt out of the blue. No one was expecting it, did not find any mention in the budget, but there it was in amendments to the finance bill. What did you make of it, and what are your thoughts?
So this is a step towards new tax regime where there are lower taxes and no concession. This is also a step towards creating a level playing field among financial services. And we hope and pray that Finance Ministry takes this journey to the logical conclusion. On your channel, I have been advocating that this arbitrage of converting interest income through listed zero coupon debentures after 1 year and 1 day to long-term capital gain, which creates tax arbitrage of 29% this year and 33% last year, needs to be stopped. There is far more tax leakage in zero coupon listed debenture than what was there in debt mutual fund. Even today, different financial products continue to have different tax benefits. And I hope and pray that this journey of creating level playing field continues going forward.
No, but specifically with regards to what has happened to debt mutual funds, Nilesh, anecdotally, one was hearing that, some of these schemes in the last week of FY23 have seen inflows that they've not seen for a couple of years put together. If you can corroborate that, and what will happen from here out, in your opinion?
So undoubtedly, since this taxation changes were from prospective effect of 1st April, it created a window or a push for investors to take advantage of previous tax regime where debt mutual funds got indexation benefits and long-term capital gains. And many of them took the advantage. Going forward, we still believe debt mutual funds probably does not have tax advantage like before, but it continues to give you diversification for as small a sum as ₹500. It gives you professional management, and most importantly, it gives you anytime liquidity. It's easy to enter into Indian debt market, but it's very, very difficult to exit. So we provide liquidity, diversification, and professional management, and that will continue to keep investors interested in debt mutual fund.
Okay. By the way, I just wanted to mention a couple of stocks to draw attention of our viewers. The Ashok Leyland stock is up well in the green. We were telling you earlier, it's a 19% growth that Ashok Leyland has seen year on year in their numbers for March. And the medium and heavy commercial vehicle space, especially the bus segment, is doing very well since the reopening of schools and offices. The bus segment has gone up 72%, while the total MHCV segment is up 20%. Nilesh, there's a lot happening here, right, in this space. I mean, commercial vehicles has picked up. There is, of course, the price hikes that will kick in because of new emission norms. So there's a lot of pre-buying that's happening in this space. But in general, are you bullish on this theme? And how would you take it forward in the auto space now?
We remain positive on the auto space, mainly first the passenger vehicle, then the commercial vehicle, and then the two-wheeler. In passenger vehicle, clearly there is a K-shaped recovery. There is more buying at the mid to higher end than at the lower end. There is a waiting period. Commodity prices have cooled off, and that has not been passed on to the consumer. So margins will be positively impacted. Finance cost has gone up, but it has not impacted demand significantly. So overall, passenger cars and auto components continue to remain on the positive side. Commercial vehicles are also benefiting from general economic recovery. The emergence of India as China +1 and also becoming part of the global supply chain management will continue to support commercial vehicle recovery. Two-wheelers have seen subdued demand, especially in rural India. Let's hope and pray that it recovers soon. But our preference right now will be auto passenger vehicles, auto components, and commercial vehicle.
All right. Hi, Nilesh. Good morning. Nilesh, if you want to stay protected from what's going on in the globe, maybe cement could be a play, right? And things have been moving well for them. Demand is reasonably strong. You have input costs that have seen a sharp downtick, which will help on the margin. And also, getting into an election year, normally you see good growth. How would you all approach this space?
Undoubtedly, we remain positive on cement. It's one commodity which can't be imported, so it has to be locally manufactured and locally distributed. Second, there is a huge focus on infrastructure build-up. This ahead of election gets a separate push. There is higher allocation in the budget as well as focus on execution. Put together, cement will be beneficiary, and we have seen in the month of Jan-Feb, for which data is available, the cement offtake has been fairly good.
Nilesh, we are on the cusp of another earnings season. What would you like to hear? Because I mean, I remember after the third quarter earnings, your outlook had become a little benign, right? And rightfully so. You were pointing to slight stresses emerging in corporate commentary, even numbers which have been reported on an aggregate basis. Do you expect to see improvement? Because I mean, you and your team are assuming constant conversation with your investee companies, etc., as well. So you have a sense of what's going on. So what are you hoping to hear, and what's likely, in your opinion?
So September and December 22 quarterly results were below expectation for most sectors except some outstanding performance from banking and financial services. We have seen for the month of Jan and Feb some data which is improving. For example, rural consumption, which was subdued till December 22, seems to have picked up and is ahead of urban consumption from a growth point of view. We are also seeing substantial reduction in current account deficit with services exports picking up. Put together, I would like to see in March 23 quarter numbers, or at least expectations for future, a better outlook towards rural consumption and also narrowing down of current account deficit, resulting into either higher services exports or even pick up in manufacturing exports. If the corporate commentary is more positive based on March 23 results or expectations of June 23, that will be music to our ears.
Okay. By the way, the market is not looking good. It's actually given up on a lot of its early morning gains. The Nifty is now down about 17 odd points. The Sensex is down 100 points. So not able to really hold up above that 17,000 mark convincingly, you'd have to say. What's under pressure now is a lot of these stocks, actually. IT is under pressure. Tech Mahindra, Infosys, TCS are all down and out. And BPCL, of course, because of the way crude has moved, is down about 3.5%. Nilesh, I wanted your thoughts on IT because, we're heading into earnings season now, and the hope is that Infosys will give out what could be the first look into FY24 guidance from the tech companies. Are you getting a sense that there could be more caution than positive updates from tech companies this time around? And if yes, how do you approach this space?
So my feeling is that IT is facing lots of headwinds ahead. One, there is worry about global demand. Second, there is worry on a medium to longer term basis about AI and ML disrupting at least some of the work which is done by Indian IT companies. Third, there is also challenges related to leadership transition we have seen in a couple of companies. Put all these things together, people will be looking forward to what is the commentary given by the IT management. Are they confident about growth? Are they seeing traction in overseas client order book? I think my feel is that IT sector is now bottom up. There will be separation of men from the boys. There will be few companies which may be able to withstand the headwinds which are coming up right now. But there will be a lot of disappointment also. So IT, from being a top-down sector, is now clearly bottom-up stock pick. Some will be winners and some may not be.
Nilesh, what about the entire earnings picture? Suddenly, in fact, the street started doubting that. There were some headwinds. Now we're split right down the middle. There have been some scaling back of earnings growth estimates as well. What are y'all penciling in for the next couple of years?
So it's very, very difficult to take a longer term call. And fortunately, unlike sell-side analysts, we have the luxury of not taking a yearly Sensex or Nifty EPS numbers. But clearly, there is a division at the middle. In Jan and Feb, some of the data has started showing that finally the problems which were constraining our economy seems to be behind us. Rural consumption seems to be recovering. Current account deficit has sharply come down thanks to rising service exports. Apart from IT and BPO, non-IT, non-BPO global capability center exports have also started picking up. Even on China plus one, we have started seeing some positive trends, especially in electronic component kind of industry. So overall, there is hope, But at the same time, there is also a fear in the market based on September and December 22 quarterly earnings, where other than BFSI, most companies gave little below expectation results. So either it's the number or it is the commentary. My feeling is that we are likely to see some volatility ahead in terms of earnings. Monsoon will come to know on 15th of April how severe El Nino will be and what will be the impact on Indian economy, especially agriculture and rural. Towards the end of the year, we'll also start factoring in May 24 general election and the outcome. So we are going to see volatile market, but as I mentioned, equities, 100 सुनार की एक लुहार की, 1 day's equity can overtake debt return for a year.
Okay, all right. We hope that day comes soon, right, Nilesh? Everyone's been waiting long. It's been a really frustrating last 6 to 12 months. But as you said, it pays to be patient in this in a market like this. So thanks a lot for joining in, and we will speak to you again very soon. Okay, by the way, those are M&M's numbers that have come through. The tractor sales looking good, actually. Domestic sales up 20% at 33,622 units. So we'll also get the auto numbers. The total sales have gone up 18%. So that's looking good. We'll get to that in greater detail in a bit. We'll also try and perhaps touch base with the management. But in the meantime, all auto stocks are doing well. So whether it's Maruti, Eicher Motors, MotoCorp, all up to 2.5% right now. Maruti telling us that their SUV market share is something that they hope to take up from 11% all the way to 25% next year. And now this stock is also moving up, similar to the market share. But Nigel, you're watching out for cement stocks today.
Well, that's right. Now, Jefferies, they've come out with the note, and we had given the market a bit of a heads up in the past week itself. There's a high probability that there could be a cement price increase that will be pushed about. So Jefferies has given us some takeaways from their interactions with dealers. Couple of points to note out there. The All India prices, we have been mentioning it's been weak. So it was weak for the past month. That's for March 2023. And even on a sequential basis, that's Q4 versus Q3, it's down by close to 100%. Prices, one of the reasons that they have been weak is because volumes have been pushed through. The other factor that they've mentioned is that there are price increases that have been taken about, and they've quantified it. On an average, all India, it could be higher by close to around 5%. That's the attempt to increase prices from April itself. And also they say that in South India, it could be hiked by as much as 50 rupees per bag. Demand as well has been rather strong in multiple markets, and that's perfectly reflected in Ultratech Cement's 15% growth that they've given on a year-on-year basis. On Q4 numbers, they're still working with, in spite of no price increase, they're saying that there'll be a growth in EBITDA per ton because operating leverage will play out and input costs have cooled off. Not just that, for Q1 FY24, things will look up because then you'll get the full benefit of lower input costs. Being a pre-election year, they're working with cement demand for the entire industry to grow by close to around 9%. So those are a few takeaways that came in from Jefferies.
Okay, just want to mention one word on M&M. The company has clocked in its highest ever annual tractor sales of 4.07 lakh units in FY23, and the commentary from the management is also quite good actually for tractor sales. They're saying that an increase in crop output, the mandi price is staying firm, the government support has increased in MSP for major crops, and an increase in wages under the Manrega scheme will help improve the financial security of rural households, and hence tractor sales could pick up further. So perhaps that explains why the stock is up about 0.5%. More on that later. CSB Bank is the other one which is on our radar. Abhishek is here to tell us more on that. Abhishek.
Well, Sonia, it's a strong business momentum that has continued in Q4 like it did in Q3. So deposits are up 21.5% YOY and about 8% sequentially. The CASA momentum has been pretty strong on a sequential basis, growing by 10.7% quarter-on-quarter in absolute value. So as a ratio, CASA ratio has improved by nearly about 53 basis point quarter-on-quarter. Advances growth has been pretty strong, 30.3% YOY and about 11.75% quarter-on-quarter. Calculation does show that there is improvement in the credit deposit ratio by nearly about 275 basis point quarter-on-quarter, which should augur well for net interest margin either remaining strong or improving on a sequential basis. Now, the gold loan portfolio that's grown nicely by about 10.5% quarter-on-quarter, but its share has declined by 53 basis point, given the fact that other loans, that is loans apart from gold loan, they have grown by 18.15% YOY and nearly about 13% quarter-on-quarter. So strong business momentum for CSB Bank seen in Q4 FY23. Back to you.
Abhishek, you're watching Karnataka Bank as well?
Well, Prashant, on a negative front, Karnataka Bank has surprised negatively on the loan growth front. Now, it's the industry-wide, there is a strong momentum in loan growth for the banking sector, YOY and quarter-on-quarter. But for Karnataka Bank, the loan book is down 3.7% quarter-on-quarter. So deposits are up 8.7% YOY and about 3.3% quarter-on-quarter. Their loan growth shows that they have lost market share both YOY and quarter-on-quarter. The CD ratio, credit deposit ratio, that's a sharp decline by more than 500 basis points quarter-on-quarter, which could put the net interest margin under pressure on a sequential basis. CASA is up 8.7% YOY and 6.7% quarter-on-quarter. The CASA ratio has remained stable YOY and improved sequentially, but the loan growth that has not gone down well with the investors. Back to you.
All right, Abhishek, thanks very much for that. That's Banks in Focus. We take a very quick break with news that the market is down. Okay, I think we have Mr. Kirit Parikh now joining us. We were talking about how MGL, stocks like MGL and IGL are down, 4-5% this morning. The market, there was widespread expectation that the Kirit Parikh panel recommendations on gas pricing would be approved and they would go into effect from the 1st of April 2023. Those recommendations have not come up for an approval because the cabinet did not meet last week. Mr. Parikh, it's always a pleasure speaking with you, sir. Thank you very much for your time. Prashant this side. So will are the recommendations still up for approval, sir? What's the latest? Because, as I said, the expectation was that they would have been done by now. Go on. Mr. Parikh?
Ignorant about it as you are. Can you hear me?
Yes, please go on, sir.
Yeah, I'm as ignorant about it as you are because how the government works, I have no idea. I'm not involved in this. And I hope so. I've been told that it will be approved sometime soon. And I do think that should really help the petrol, ONGC and OIL also. But let us see what happens. But I certainly don't know. I've heard from people that yes, the cabinet is considering it. It's likely to be approved. But when it will be is anybody's guess.
It can, even if it is approved at the next meeting, it can come into effect from the 1st of April with retrospective basis, right, Mr. Parikh?
That I don't know. I think personally I'm against doing anything retroactively.
Okay.
Because that really creates a bad feeling and a sense of uncertainty among investors, businessmen, and others.
Sure.
So I think they can do it from 5th. There is no sanctity about doing it always on the 1st.
Yeah, no, I got that. And I completely take that point. But you are saying that what you've been told is that it was due to come up at the cabinet level for an approval. Would you know, sir, that all the processes leading up to the cabinet considering it had been completed? Had the ministry prepared a cabinet note, sent it up?
Yes, of course. If it goes to the cabinet, ministry must have prepared everything because you don't waste cabinet's time without full preparation.
Correct. No, I'm saying, has all that been, would you be aware if all that has already happened and at the next meeting it could be taken up?
I'm 100% sure that it's all happened. Otherwise, it would not go to the cabinet. The second thing is that, the committee had representatives from all ministries, and they're all signed it. So I'm sure that taking the ministry's consensus, etc., should not have been difficult. And now that, of course, there are always issues which economists like us would not fully appreciate the political concerns. So there may be some issues there, but that I'm still hopeful that the government will accept the bulk of our recommendations.
Mr. Parikh, and the heart of the recommendations, what you've proposed is broadly threefold, right? One is prices now to be linked to crude prices, right? Not international gas prices.
That's right. Yeah.
Number two is there is a floor and there is a cap, a ceiling.
That's true. Right.
And there is a increase which is built in every year, right?
That is correct. And I should add one more. That
Please.
We have said that by 1st January 2027, or everything should be market determined.
Okay, all right. Would you, Mr. Parekh, would you know when is the next cabinet scheduled to meet? Would you be aware?
I have no idea, really.
Okay, but you remain very hopeful, and as you said, perhaps no reason why it should not be accepted.
Yeah.
Right. That's your sense.
I'm quite hopeful that it will be accepted.
All right, Mr. Parekh. Thank you very much. Thank you for taking our call, and thank you for telling us what you know at this point in time.
Yeah.
So for now, while stocks are lower, Mr. Parekh basically telling us that he's hopeful that the cabinet should okay it. I mean, could be the 1st of Feb, could be at the next meeting, could be effective whatever date. There's no real sanctity to the date. Stocks are down because there was expectation that maybe it gets done last week and then goes into effect the new financial year, which has not happened so far. The stocks on your screen, MGL, IGL down 4.5%, 5%, maybe a little bit of recovery. Gujarat Gas is down about 1.5%. We'll take a break. We connect with Prashant Jain, Joint Managing Director and Chief Executive Officer at JSW Energy. The company has completed the acquisition of Maitra Energy's renewable energy portfolio. Later, we'll connect with Hemant Sikka, President, Farm Equipment Sector at Mahindra & Mahindra, to decode their sales for the month of March.
Welcome back. Well, JSW Energy has completed the acquisition of Maitra Renewable Energy portfolio. To alert our viewers, Maitra portfolio assets have long-term PPAs with an average remaining life of around 17 years old. To discuss this, we're joined by Mr. Prashant Jain, the joint MD of the company. Hi, Mr. Jain. Good morning. Thanks so much for joining in. Well, the last time we chatted, you said that in that fiscal year, that's FY23, it'll get completed. Well, you made it. So good on you. But what are the synergy benefits you'll get post this, this acquisition? And also, you were talking about the EBITDA number going up by close to around 450 crores. That's on, right?
Good morning, and thank you, Nigel. Yes, we are on track, and we talked about the synergies in terms. First is the capacity expansion and increase in our renewable portfolio. Second, the majority of their assets are close to our assets, which are being constructed in the state of Tamil Nadu, where we are building second hand. So there will be a lot of other synergies in terms of O&M and other supply chain will be coming to us. And we explained to the market that there will be an additional EBITDA improvement of between 400 to 450 crores over a period of 12 to 13 months time frame. We will achieve that. So I can see that the exit run rate in the month of the March 2024 will be with the increase of 400 crore rupees EBITDA in Maitra portfolio.
Okay. Any indication of what the EBITDA growth would be post that? Once the 400 to 450 crores, is that an annual run rate that you're looking at?
So this asset was making an EBITDA of around 1250 crores. So this EBITDA will go up by another 400 to 450 crores. So between 1650 to 1700 crore will be the EBITDA. And that's what we explained, that on a normalized EBITDA of 1650 to 1700 crore, the enterprise value is 10,200 crore. So this is close to 6 times EV EBITDA, which will be value accretive for shareholders from the day one.
Okay, 6 times EV to EBITDA and value accretive for shareholders from day one. Got that. Can you tell us a little bit about the opportunity as far as the PLI scheme is concerned for which you've applied? What are the incentives that you are eligible for at the moment? You have a stated target as well of 10 gigawatts by 2025. Do you hope to achieve, are you on track to achieve that? And is this, I mean, if you can just run us through, what the next 12 to 18 months would look like as far as the opportunities in the PLI scheme?
So two things. One is on the capacity front. Yes, we gave a guidance of 10 gigawatt by FY25. So we have already logged in 9.9 gigawatt, which we will be completing by June 2024. So we are much ahead of the schedule, what we have talked about. In addition to that, we have already logged in close to 3.4 gigawatt of the storage opportunities also. So we are ahead of schedule. And in terms of the PLI, India is not having enough supply chain for the solar panel availability point of view. That's why the government has come out with a PLI scheme, and we decided that we will be setting up a wafer, cell, and module facility for a 1 gigawatt capacity. We have got 320 crore PLI under that particular scheme. We will be spending close to 1,600 crore rupees in the capital expenditure. This asset will be primarily used to meet our captive requirement, because we are having a target of 20 gigawatt of the generation capacity by FY30. So we will be requiring quite a lot of capacity for the solar panels, and we will be importing in the interim polysilicon and then manufacturing wafer, cell, and modules.
Well, Mr. Jain, could you tell us what's the value unlocking part of the business then? Everyone was saying you're going to scale up, and then in fact the green part of the business, there could be some value unlocking. What's the way ahead? Will you do an IPO? Will you get an PE in? Is there an InvIT you're planning? Give us some kind of a time frame, and what could be the likely outcome out there?
So we already outlined it, that our idea is to increase the capacity and build the business, and we are on track to build that. We have already done the restructuring of the business at this point of time. So JSW Neo has been constituted, which is housing all the renewable business of the company. And so we are ready in order to tap the opportunity whenever any suitable opportunity comes in. We need to keep one thing in mind, Nigel, that we are generating close to $350 million free cash every year, and it is going to grow as our capacity is increasing. And we are deploying that for the growth. So we have enough cash available at this point of time. However, as we did this acquisition of Mitra, we are looking at a couple of more acquisitions as well as other growth opportunities. Hydro pump storage is another one opportunity. Green hydrogen is another opportunity. So we are looking to tap the capital from the like-minded people who are believing in the India story for the long-term perspective. So sooner than later, this will also happen. And I cannot put the timeline at this point of time, but I can tell you that, yes, we are in discussion with some people.
Okay, so you're saying that a couple of more acquisitions on the radar, the hydro pump storage space, the green hydrogen space is what interests you. Have you earmarked any kind of, war chest for these acquisitions? I mean, how much would you be pumping in? Will it largely be from your cash or your internal accruals, or would you look to tap the market?
We are a highly underlevered balance sheet, Sonia, at this point of time. We have already given a guidance that we will be spending close to 10,000 crore rupees every year for next 10 years, which can be done from our own internal accruals, and also we can lever up a little bit of balance sheet to do acquisitions. And at the same time, we will be looking at tapping the capital markets through the strategic investor or an IPO route at the JSW Neo level at opportune time. So everything is contingent upon the right opportunity at right point of time. But what I can say that we are absolutely future ready.
All right, Mr. Jain, final question before we let you go. On your thermal capacity, that is, 20% is not tied up. So that gets the benefit of higher prices as well. So on the thermal side of things, could you tell us how is demand? Last time you joined us, you said it's rock solid. And give us a rough update on the merchant rates as well.
So power demand went up by 8.5% last year. March was subdued because of the unseasonal rains throughout India, because of which the demand contraction was there. And And that is still continuing because we are seeing still the rains are in various parts of the country. The power prices were ruling close to 8.5, 9 rupees, but now they are down to 4.5, 5 rupees. And I'm quite upbeat about the power prices in time to come. However, recently last week, the cap on the merchant tariff have been reduced from 12 rupees to 10 rupees. I feel that is not a fair move by the government. It is well understood that it is the election year, but if there is a cap, there should be a floor price also. When power companies bleed, there is no floor, and still, power is being sold at 50 paisa or 1 rupee in certain time blocks. So if there is a cap, there should be the floor. But however, I am very, very much upbeat about the power prices in time to come because demand is growing quite robust and enough supply is not coming up.
Yeah, no, that you highlighted last time you were on as well. Mr. Jain, just one last question. We've been reporting how distributors were asking for hikes, and some of these hikes are coming through. I mean, so for example, in Maharashtra, it has happened. In the city of Mumbai, that's going through from the 1st of April. Some of the other states, it's going through. Although in states like Bihar, there has been a bit of a pushback. Could you tell us what is the overall aggregate situation, and does it impact, in what way does it impact you?
So it doesn't impact us because we are not in the distribution business. And in any case, distribution business is also regulated one. So as the power prices go up, because, you need to understand that there is an inflation in everything. When the railway freight goes up, coal prices go up, or the transportation cost goes up, there is a power prices go up. And then when the power prices go up, the regulator decides a higher tariff for the consumer. And this is how it works in. As far as JSW Energy is concerned, it doesn't impact us. But yes, the thermal coal prices and as well as the power prices will keep inching up by 3 to 5% year on year.
Okay, all right. Mr. Jain, thanks a lot for joining in and speaking to CNBC-TV18. That's JSW Energy. With their plans going forward, both in terms of growth, they're looking at 10 gigawatts by FY25. They've locked in 3.4 gigawatts of storage opportunities, and they're also looking at a couple of more acquisitions as well. So the future is pretty bright. But let's do one thing. Let's talk about the tractor sales that came in from M&M just a while back. It's looking good, actually. Total tractor sales went up by 18% year on year. Domestic tractor sales were up 20%. And the company has seen record tractor sales in FY23 to the tune of 4.07 lakh units, which is a growth of 15%. Hemant Sikka joins in. He's the president of the farm equipment sector. Mr. Sikka, good morning and thanks a lot for joining in. 15% growth is what you saw in FY23. Do you think it will be easy to replicate that in FY24, given that, there are several concerns, primarily the concern being the impending slowdown in monsoons? How do you think all of that would hit growth?
Thank you, Sonia. So first of all, April, the month of March has been very strong for us. I mean, we have been able to clock almost 33,600 units, which is a growth of 20%. The industry has been only clocking a growth of only 12%. So overall, I think it has been very, very good for us.
Will it remain good is the question now, Mr. Sikka. Good morning, Prashant here. Because of, the unseasonal rains that we are seeing, the damage to crops, which is, reports are coming through across states. It's coming from Uttar Pradesh, Madhya Pradesh, wheat crops, widespread sort of devastation. In states like Maharashtra, we are seeing that. So what is your assessment from the ground, sir?
No, see, Prashant, what happens is that India is a very large country. And mostly in every year, we get issues like this in a couple of states. Even now, if you see, it's pockets of Rajasthan, UP, North Gujarat, that we have issues like that. So overall, at an aggregate level, I don't think that the demand will be impacted that much.
Sir, just coming back to one point you made about the month of March, you said that it has been very strong for you. But overall, for the full year, can you give us any indication of how things would go? 15% may be hard to replicate, but are you looking at 10% growth for the industry as well as for yourself? Is it going to be double digits, or do you think single digits is something that will be feasible? Any outlook?
Yeah, so Sonia, FY23, as you know, has been very, very strong for the industry. When I spoke to you a few months back, we were talking about a growth of about 5 to 6%. Then we upped the guidance to about 7 to 8%. Finally, the industry has been very strong, clocking all-time high growth of 9,45,000 units, which is a growth of 12%. very happy to share with you that the Mahindra growth has been 16% over this. So we have got some valuable share point gain. Our market share is upwards of 41%, and we have gained 1.2% market share in the whole of FY23. So overall, the industry has been very strong. Our performance for both our brands, Mahindra and Swaraj, has been very strong. And we believe that going forward, with the kind of cash flow that we are seeing with the farmers, the industry should remain positive. Let me also speak about what are the factors which have influenced this growth in FY23. As we spoke last time, Nigel, with you, that the monsoon for the last 4 years has been above normal. Now, this has never happened since the time records are kept, that is since independence. And if you see the reservoir levels, that is also running at a very high level. So as a result, the cropping has been very strong. The output, crop output has been very strong. The mandi prices are kind of being very firm. And let me also thank the government, because the government has been also upping the MSP. This year also the MSP for key crops has been in upwards of 5 to 9% depending on various crops. So all of this has led to very strong cash flow with the farmers. And what were the farmers doing? I think farmers are also putting this cash flow to good use, because they are kind of investing into assets which are income generating. A tractor, you know, a farmer considers tractors like another earning member in the household. So rather than putting this money aside for other discretionary expenses, that farmers are putting this money to buy tractors so that they have a earning kind of asset in their households. So this has kept the demand very strong, and we believe that since the Rabi output is going to be very strong, I know, Prashant, you spoke about few pockets here and there where we have had some seasonal rains, which is unfortunate, but in a country like India, which is a very large agri country, this year or that year, these kind of things do happen. But at aggregate level, the demand is not impacted, at least for the tractor industry. So going forward, we are very optimistic that with all these positive factors, with the government support continuing in an election year, I think the industry should do very well.
Could you put out a volume growth guidance for tractors in 24 over 23? You know, I was looking at a ICICI Securities note. They are saying, and this is their finding, they say in the last 15 years, on 4 occasions of El Nino, tractor volumes have fallen by an average of 12%. I think a couple of months back, tractor volume growth expectations were between 6 and 7% for FY24. Has that changed for you? Would you like to put out a number, sir?
Prashant, we will not like to put out a number and give you my reason for that. See, right now, the data on El Nino is all kind of very, very half-cooked data. You know, there is something called a spring predictability barrier. Now, that is not letting the entire ENSO data to come in and where we can make some positive or negative indication. I think we'll have to wait till middle of April. Prashant, you know, these are the times of social media. Everybody wants to be first off the block. Even if it is the data is half-cooked, the data is not very reliable at this stage. I would rather take a step back, wait for the reliable data to come in, which is just like 2 weeks away. And then we can make a call whether El Nino will be weak, moderate, strong, what kind of intensity the El Nino will play. Having an El Nino is not so negative, let me tell you, if it is a weak El Nino or a moderate El Nino. Still, the rainfall will not be impacted too much. So I think we should wait for middle of April or third week of April to get reliable data. And then we can always come back and share more, what's happening on the ground, how are the farmers feeling, what is the cash flow, what is the sentiment with the farmers. I think all these factors play very well into the rural agri economy.
All right. Hi, Mr. Sekar. I wanted to ask you about the inventory in the system. What is it at currently, and what's the normal levels, if you could compare that?
So, Nigel, one of our strong point for Mahindra and Swaraj, both our brands, has been a very strict control on inventory levels. So currently we are running an inventory level close to 4 weeks. This is a long-term average, and we continue to maintain that. So I am not too concerned with the inventory at this stage. In fact, last year, going into the new year, I was concerned that we were running at very, very low inventory level. But since we did not have any supply chain concern through the year, we have been able to build up a little bit of more inventory. So now we are at a long-term average, which is about 4 weeks of inventory for us.
There are some new regulations, right? The TREM 4 regulations for higher than 50 HP segment. They have been implemented now. What is the impact that that would have on growth rates, and any indication of when the regulations for the rest of the tractors would be implemented as well? And what would the impact be on the industry?
Sonia, thank you for asking me this question, because this has been a very, very important change in the emission for the industry, and the entire industry has migrated very well without any hiccup. So just to, for your viewers to know that on 1st of January this year, we have moved to TREM for emission level only for tractors 50 HP and above. So all the tractors which are up to 50 HP, nothing changes for the industry for that. So only for tractors above 50 HP have we gone for one level emission up, which is only 7% of the overall industry. So 93% of the industry is actually below 50 HP, where nothing changes. The whole industry has taken the switch. For both our brands, Mahindra and Swaraj, we have gone ahead. We have sold thousands of new tractors into the market. I think the price has got very well established, and farmers are liking the kind of product that we have come up with. So I see absolutely no concern. Now we are almost fourth month running into this change. So overall things are looking very well for us. The next change is actually called the TREM 5 change, which is still some time away. And as TMA, we are very actively engaged with the government to see what is the kind of roadmap that the government will like us to follow. So currently it's TREM 4, which is only for 50 HP and above.
Okay, all right. So 90% you're saying is below the 50 HP segment. So there's no major impact that you're seeing because of these changes.
Yes.
Got that. Mr. Sikka, appreciate your thoughts. As always, great speaking with you to understand what's happening in the tractor market. And as you said, you're not going to give us any guidance for FY24 because of the unpredictability of the monsoon season. We get that entirely. But congratulations on a decent set of numbers that you've clocked in this particular month. By the way, for the market, it's very, very quiet. I guess it's the truncated week syndrome, where perhaps volumes are on the lower side. Everyone's out and about traveling. So maybe, volumes could be thin today and movement could not be too much on the headline index as well. At least that's the feeling you're getting right now. But the Neeta Mukesh Ambani Cultural Centre was inaugurated on Friday in Mumbai, as we all know. It is India's first of a kind multidisciplinary cultural space, as it showcases India's finest offerings in music, theatre, fine arts and crafts. Several Bollywood and Hollywood celebrities, along with other dignitaries, were in attendance at the two-day grand event. Here are some glimpses of the mega event.
Welcome to what we hope will become India's finest platform to present our culture in all its diversity and depth, a home to art and culture in all its forms.
For Mukesh and me, the NMACC is a dream come true. For a long time, we had nurtured a dream that India should have a world-class cultural center.
Okay, welcome back. It's an absolutely flat kind of a day. There's a 5 or 6 point change coming through on the index. 17,365 is where we stand at this point. By the way, volumes have picked up massively. I just want to take a look at if there are new stocks which have come into the mix. There are. RVNL is up 6%. I think RVNL did very well last week as well. Friday was a good day, Thursday was a good day, and today it's another 6% higher. The oil stocks, ONGC and Oil India are doing well. Oil is up. Oil India is up 6% as well now. GMR Infrastructure, I think there was a Kotak note upgrading their rating on GMR Infra, 6% higher, 43 on that one. Tejas Networks is another one which was not there in the morning, 5 1/3% higher. Big volumes on Tejas Networks. Atul Auto is up 11.5%. I think that this would be the sales numbers, monthly sales numbers there. 350 or so on Atul Auto. SML Isuzu, I think we mentioned this earlier as well. Kirloskar Brothers is up 7%. I think it was a decent mover on Friday. It's following up with good gains. Nucleus Software, HOEC are a few other names. Then volumes start to drop off, but I think this is the list of the big volume-led gainers that we have at this point in time. Overall market breadth is a comfortable 4:1 in favor of gainers. Mitesh is with us to tell us what he'd like you to do in terms of taking fresh trades and where. Mitesh, morning again.
Okay, I can't hear Mitesh, so we're just trying to fix that audio. Yeah, go ahead.
Sorry, I think it was a mute by mistake. The idea is that, Nifty kind of hit 17,450 onwards. We were 20 points below that and have seen some profit booking happen. We've had good rallies in the last 3 sessions, starting from levels of 16,900 to about 17,400. I think this is the level where you will see some kind of supply of profit booking emerge. But overall, the directional bias on the hourly and the 2-hourly charts remains positive. So my idea would be to use this decline to buy into the index, closer to about 17,320, 300. Excellent entry zones with a stop below 17,240, and I maintain on the upside targets of 17,450, 500, but eventually 17,750 as well. So stay positive. On the stock side, I have a buy on Apollo Tyres. It gave a gap up on Friday and then has seen good follow through today. Buy with stop just below today's low of 315. So let's take about 314 or thereabouts, and a target of around 335, 340 can be looked at on the upside. Balrampur Chini is something which could possibly start a new trend. So that's a buy as well. Keep the stop below 396. Look for targets of 418.
All right, thanks a lot for that, Mitesh. By the way, for the market, still very quiet, so it would be a good idea to get some focus in on the commodity markets now. Manisha Gupta joins in for that. Manisha, after that big spike up in crude, how are things shaping up?
Well, the good thing is that we are still holding those kind of levels there. So it hasn't really been a flash in the pan kind of a thing. So the first day of trading day in April, and you are trading with nearly 5.5% of gains coming in for the crude oil prices. So it's up in Asia right now. You'll want to see on how Europe and US pan out as those markets open as well. But while we've started April on a very strong note and we are trading at a 1-month highs right now, for the month of March, the crude oil prices closed with a decline there. We were down nearly 5%. And then for the quarter as well, it was a sharp decline of nearly 7% for the March quarter. And this has been a third quarterly decline that we have seen come in for the crude oil prices there. Remember, we saw a 15-month lows of $70 a barrel in the month of March as well. So from 70 to 85 has been a strong gain. Actually, it all has come in last 7 or 8 trading sessions where we have seen nearly 15% of a jump up come in for the crude oil prices in last 8 trading sessions itself. The latest support clearly comes in from what OPEC and allies have done. It has been announced a surprise production cut of 1.16. Most markets were betting that OPEC will not budge from here, but clearly OPEC is back in action and back in control as well, with 1.16 million barrels per day of a cut, with more weightages really being carried on in sense of precautionary measures and to ensure that there is stability into the market is what OPEC said. So much of the output cuts clearly coming in from Saudi Arabia and Russia. UAE and Kuwait as well have seen more than 100,000 barrels per day of a cut coming in. Other countries like UAE, Kuwait, Oman, Algeria also cutting anywhere between 40,000 to 200,000 barrels per day on your screens there. Well, OPEC output, when you look at the month of March, has been at 28.09 million barrels per day, which is nearly 7,000 barrels lower than what they did in the month of February there. So we are looking at lower and lower outputs there. Total volume cut of OPEC right now stands at 3.6 million barrels, which is 3.7% of the global demand. So that's a considerable chunk going out of in sense of supplies in the global markets. And not just that, the last couple of weeks have been strong strong because we've seen 400,000 barrels per day of an export halted from Turkey as well. Markets have seen strong Chinese demand coming back, and you also are looking at US inflation easing off a bit. That would mean that US perhaps will not go for aggressive rate hikes, and that is another thing that seems to be supporting the markets right now. Goldman Sachs report that came in last evening suggests that we are now looking at a $95 per barrel of an average for this year and $100 per average of a next year as well. So there are more bullish cues coming in. The market has been short, by the way, so we are looking at short covering and some buying as well, and that could really be supportive going forward in other time zones as well.
Okay, thanks a lot for that. So that is on the crude oil market and what's been happening so far over there. We need to take a quick break, but don't go anywhere. On the other side, our special segment, it's the economy. Lata will get chatting with Somsekhar Vemuri of CRISIL Ratings and Jitin Makkar of ICRA to discuss about the corporate debt situation in FY23. Stay tuned.
India's top two rating agencies, CRISIL and ICRA, have reported their upgrade-downgrade summary for the year that ended last week on Friday. And both point out that the number of upgrades are a bit lower than in the previous year, and the number of downgrades are a bit higher. Now, the credit health of corporate India is still better than the last 10-year average, the rating agencies point out, but there is some moderation from the excellent levels that one saw in FY22. Joining me to analyze the FY23 upgrade-downgrade tally are Somsekhar Vemuri, Senior Director and Head Ratings Criteria, Regulatory Affairs, Operations, oh God, quite a bit, at CRISIL Ratings, and Jitin Makkar, Head Credit Policy and Senior Vice President at ICRA. Gentlemen, thank you very much indeed for joining me. Mr. Vemuri, if I may start with you. I think it's very clear that FY23 first half, you are comparing first half and second half. First half, you had 5 upgrades to 1 downgrade. It's kind of moderated a bit as you come to second half. Can you just give us the details of the numbers first?
Yeah, thanks, Lata. When we look at credit ratio, which is nothing but the ratio of upgrades to downgrades, that has moderated to about 2.19 times in the second half compared to a level of 5.52 that we saw in the first half. This was very much in line with our anticipation because when in October we did our previous edition of Ratings Roundup, we had highlighted that we expect this ratio to moderate, given that globally we are seeing higher interest rates and a slowing kind of a demand. So the moderation is very much in line with our anticipation. In fact, export-oriented sectors, have seen a far sharper moderation in both the upgrade rate and pick up in the downgrade rate, which is there. Overall, when we look at the overall segments, we have seen that upgrade rate has moderated from the high of almost 16% plus in first half last fiscal to about 13.5%. It's still much higher than the 10-year average that we have seen, and the reasons are the steadfast domestic demand which is there, the push from the government, especially on the infra side, as well as the very strong balance sheets for the corporate India. However, on the downside, what we have seen is the downgrade rate has picked up, and at about 6.2%, it stands at, it's very close to its 10-year average. It's nearing its 10-year average, and the slowing global growth that we have seen, as well as some of the profitable.
Okay. I think we got the gist. Let's get back.
Emanating on account of, especially on small is easy.
Yeah, got it. We'll just set that line straight. Mr. Jitin Makar, your numbers are, you had upgrades of 561 in 22. Now it is dropped to 441. Number of downgrades were 184. They've also come down a bit to 156. But number of upgrades to downgrades were 3:1. Now they are more like 2.8:1. Your thoughts, what did well, what didn't?
I think if we look at the performance, the rating performance in FY23, a few sectors which stood out in terms of high rating activity would be real estate, financials, textiles, and hospitality. Now, the real estate sector, we've seen that there were a large number of upgrades in this sector, continuing with the trend that we've seen in FY22 as well. And we've seen almost 600 million square feet of sales that this FY23 is going to clock. New launches were calibrated by players. Leverage levels had come down. Year-to-date inventory levels are, I think, at a decadal low. So these factors supported the credit profiles of a large number of real estate entities, and that supported the upgrade momentum. Likewise, in the financial sector, we're in a phase where the asset quality of financial sector entities, including banks, has been at its decadal best. Credit growth has returned, and equity mobilization has also been happening. In fact, a large number of upgrades in FY23 were also contributed by fresh equity mobilization by several financial sector entities, particularly the mid-sized NBFCs. So talk about the real estate sector, financial sector. Hospitality sector, again, was a standout sector. Again, from the second half of FY23, we've seen that a large number of upgrades have happened in the hospitality sector, and that's they've shrugged off the deep pain and strife that the sector had been going through in FY21 and the better part of FY22 as well. So these are the sectors where we've seen a lot of rating activity.
Okay. Yeah, got that. Actually, I want to come back to you on construction and pharma, where in spite of everything going good, those two sectors have not shown that kind of improvement in the upgrade-downgrade ratio. Mr. Vemuri, I wanted to come back to you on the worries you see about the coming year, or the year that has just started. Your report points out the fact that inflation persists, even if it is moderated slightly, and that the global headwinds are severe. So do you think corporate balance sheets and hence the upgrade-downgrade, the number of downgrades can rise?
So clearly, from our overall outlook perspective, we still anticipate upgrades to outnumber downgrades, going into fiscal 24. Having said that, we believe there may be a little bit of moderation compared to what we have seen last fiscal. Clearly, the domestic demand holding up and the government's continued infra push are positives. And balance sheets also have a reasonable amount of cushion because they are at a decadal low. At a median gearing of about 0.45 times in terms of debt to equity, balance sheets are at their healthiest that we have seen in the last more than 10 years. And hence, even if there is a little bit of pain which is there on the profitability side, there will be cushion to tolerate that. Having said that, typically what we see is when the monetary authorities take policy actions, the full impact of that is felt with a lag of 3 to 4 quarters. So the rate hikes that we have seen last year by RBI the effect of that is likely to be fully seen in this fiscal, and hence, you could see some impact on the demand. And on the global side, like you highlighted, clearly there are headwinds which are there, especially from US and the Eurozone. And last but not the least, even from the monetary tightening, tight environment globally, for those corporates where there are upcoming sizable debt maturities of overseas debt, the refinancing risk is also something that we will want to watch.
Okay. Jitin, if you can point out to where, I mean, your press release also points to similar headwinds, monetary tightening in India, growth question marks abroad. Where will you worry about? Which areas?
Yes, you're right that there are few headwinds that India Inc. is going to be seeing in FY24, but we are not that much worried that it's creating a lot of ruffles in our outlook on the broader economy as such. Even if we see that there is going to be an export slowdown, we're expecting around 6% decline in exports from India, merchandise exports from India in FY24. But if you look at history, in the past, whenever there has been episodes of global economic slowdown, things have bounced up very quickly. Whether you talk about the textile sector or the gems and jewelry sector, FY24, they might see a slowdown, but it might not be to the extent that it becomes unmanageable. And that's why we do not expect downgrades to go too high, too far ahead of themselves in FY24 compared with FY23. Likewise, interest rate risk is certainly a risk. FY24, we'll see the full impact of hiking the interest rates, the MCLR rates, to be transmitted to the P&Ls of the entities in FY24. But there again, the severity is not going to be to the extent that it becomes unmanageable.
Yeah,
that said,
I get that. Actually,
yes, well spot.
Okay. Sorry, I'm hurrying because I'm trying to get maximum from you all in the little time I have. Mr. Memuri, what would be the specific sectors you will worry about, if at all?
I think, the sectors where debt is very heavy and the interest rates are fairly high, those would be the sectors. Typically, some of the infra sectors would come in that bracket. And the export-oriented ones, clearly, because there is a challenge in terms of the demand globally. So those are the ones where we would typically pay a lot more caution. Also, if you look at MSMEs, even last year itself, we saw that quite a lot of downgrades were coming from the MSME segment. That is also something that we would want to watch out for.
Okay. Do you expect MSMEs, the munificence they got, the SOPs they got from COVID or because of COVID will now have run out? So could you see, therefore, more downgrades, Mr. Memuri, you first, MSMEs, mid-caps?
Yeah, clearly, with the COVID policy kind of relaxations that were there for the MSME sector, now coming to almost an end. And the debt which was there under moratorium, those repayments kind of coming on. Their ability to tackle the higher inflationary trends and their ability to kind of pass on higher raw material costs is something which is, which has been tested and likely to continue to get tested. And that is where, there would be a little bit of pressure on the MSME sector.
Okay. I just want a one-word answer from y'all, if y'all can. Mr. Makkar, are you pretty sure that the upgrade-downgrade ratio will worsen a little bit in 24?
Yeah, it should, I think, because downgrades should inch up from here, and a lot of rebound that was due the past 2 years, that would have happened in 2020.
And Mr. Memuri?
I would say moderate from these levels, not worse.
Okay. Not worsen. All right. That's very important, the two words. Thank you very much, Jitin and Mr. Memuri, for giving us a wrap of the year that was and some red flags that we can't have excellent upgrade-downgrade ratios going forward. Upgrades will lessen a bit, downgrades will increase a little. We wrap up on Bazaar. Chartbusters up.